Good evening, everyone. Hope you all having a wonderful Thursday. We'll be breaking down the E-mini 500 futures contract. Per usual, we're going to be looking at our monthly, breaking it down to the weekly, down into the daily, down and then into our intraday 30-minute time frame, which is what I primarily trade off of. Today was a very interesting and exciting day. Pretty good range overall. Traded the day really well, and that's partly in thanks to Paul Asmar. I don't know if you guys know who he is or if you guys been in his trading room. Anybody that does trade and is stopping by my video for any reason, I highly suggest checking out his videos. I post one in the morning and one in the evening, both for free. However, if you'd like to join his room, there'll be a link down below. Um, I do recommend checking out his channel though. The man is a whiz. Huge shout out to him. He's helped me in a lot of ways, learning the markets and just being in his room helps give a little bit more confidence in my setups as well. Like I'm sure I'd trade the same setups the same way, but having him on the mic, hearing him break down the market, talking like giving it to you kind of like baseball, inning by inning, what's occurring is kind of exciting and also helps give more conviction. Keeps you out of trouble as well. Anyway, let's go ahead and get into the video. Let's go ahead and break down everything. I'm not going to get into all my trades today. There is one trade that I want to review because it was a beautiful trade. I wish I would have held on to it just a little longer. However, monthly, for me, it's still in a balance. We are still in a large range according to my standards. My monthly balance high is up here at 43.2750. My monthly balance low is here at 35.02. I was saying how we need to find acceptance above this 41.41 level in order for me to call the monthly up. So for me, acceptance above the 41.41 level would mean we're getting above the 43.2750, and then at that point, my monthly would begin one time framing up or creating higher highs and higher lows and taking out previous time frames highs, right? So uh, coming out of it inside month up, I mean, that's a good thing for buyers, good thing for bulls, but however, we are not finding acceptance like we want over the 41.41 level. However, there's still a lot of trading time left in the month, and a lot can occur in the month, but as of right now, it is not looking hot within the first couple weeks of February. So, right now, kind of an ugly candle. Not finding much above 41.41, but a bunch of sellers. So maybe that was just a pretty good target for a lot of people to get out of their trades, and we'll look to close back inside of January's range. That's a possibility. However, in the other time frames and in this one, buyers still have a lot. So in the weekly, buyers still have a lot going for them. Let's go ahead and look at that. Weekly, buyers still have a lot going for them, right? We've been one time framing up since we came out of that weekly balance. Down here, one time framing up 1, 2, 3, 4, 5 weeks in a row. Just because we haven't taken out this our last week's high yet doesn't mean we're not still one time framing up. We have to take out last week's low in order for us to stop one time framing up. However, tomorrow, if we close inside of last week's range, I will say the daily or the weekly has gone from up, right? We've been taking out previous time frames up, right? Up to balance, saying we'll be trading inside of last week's range as a balance. And if we were to take it out the next week, then we'll continue one time framing up. And if we were to take it out on the downside, then we'll just firmly be coming into a 4 week balance. Now that's looking ahead, right? So I'm just saying like either we're going to look something similar like uh, this, right? And we'll continue to one time frame up, or we'll look something similar like this, where we put ourselves into a 4 week balance and trade in the range of 42.09 and 40 or 39.63.25, right? So that's a possibility. It's what we're looking at on the weekly. Weekly has gone for now an inside week. Let's look at our daily. Daily, a lot of interesting things happening here. As the daily, we were in a balance. Uh, we put ourselves into a 4-day balance, right? We were at a two. We went down. We took because we took out that daily low. We began one time framing down for 1 day. Then the next day, we put ourselves back into a balance by taking out that daily high. So we are in a 4-day balance. Then today, after yesterday's inside day, we come out of an inside day to the downside, have a pretty good continuation, and took out our balance low. Question is, do we say that the daily is down, or do we say that we've just stretched our balance low? Balance low was at 40.9825. This daily's low, right? 48.98, 40.9825. Today's low was 40.7825. So roughly about 20 points of extension to the downside. Uh, I think me personally, I want to call it down, but you got to give buyers credit where it's due, and Paul made this point clear in his video as well. You got to give the buyers a little bit of extra breathing room because they have been doing so well. Bulls have been stepping into the market, buyers have been stepping in. So we'll give it to them for the day. Say we've just stretched the balance low. However, if tomorrow we cannot get back into the previous 4-day balance range here at above 40.9825 and close back inside the range, and we take out today's low, then you'll be firmly down, one time framing down 2 days in a row. Okay? 20-day moving average is at 40.61. I said if we took out the balance low, you'd have a good chance of testing the 20-day moving average. So that is still a possibility. We could still backtest the 20-day moving average. We get below that. Then you'll look to test this daily low from the Fed day low at 40.4850, right? And that would firmly mean we're below the 20-day moving average. So right now, daily has broken out of balance to the downside, but we're giving them buyers due a little bit of credit where it's due. We're going to see if tomorrow we take out today's low and one time frame down, or continue to one time frame down. If you can see here, we didn't quite take out yesterday's high. We got close, but we didn't quite take it out. And we'll look at that on our intraday time frame here in the 30-minute profile. Just 30-minute candles, right? It's essentially all it is. That's what we're going to be looking at today. So, some things I want to point out that's very important. If you do not know when it comes to the futures market or pre-market equities, whatever it is, if you do not know where the overnight highs and overnight lows are, and you are trading blindly. If you do not know where things like single prints are, or an afternoon rally high are, or is, excuse me, English is a difficult language. Don't blame me, I didn't create it. If you don't know where those locations are, if you don't know where the previous day's high is, if you don't know where the previous day's low is, if you don't know where a 9-wide point of control is, then you are trading blind. All right, just plain and simple, trading blind. So one thing I want to point out that is extremely important is knowing where the overnight highs and overnight lows are. Let's go ahead and look here. Right here you have our overnight high marked. Overnight high was at 41.70.25. Okay, that was our overnight high. Yesterday's high was at 41.68 flat, right? 41.68 was the previous day's high. So needing to know where the previous day's high is, we'll just mark it like that. Previous day's high, 41.68, and knowing that the overnight high is at 41.70.25. If you look here, when we opened up today in A period, we were opening up near the previous day's high and above like everything else from yesterday. I'll show you that here in a second. But we opened up near the top, right, of yesterday's range and could not take out the previous day's high, and we could not get the overnight high. That was kind of a telltale. Now on the S&P 500 or on the SPY, they did take out the previous day's high, but not by much. In SPY, they had a what is called a look above and a fell. So they took out the previous day's high and did not find acceptance above it, didn't extend very far above it, and failed. And then guess what? That typically means we'll rotate down and visit the previous day's low. And that is exactly what occurred today. We trended down the rest of the day. We got the overnight low in G period, so some things got into sellers' favor pretty early on. So I just wanted to show you guys the importance of having an overnight high marked on your chart and the previous day's high, so you know that if you pushed up to those areas and you couldn't take it out, then sellers are stepping into the market, right? Buyers are not, sellers are stepping in, and they're shorting this thing. You either have people that are shorting or you have people that are taking profit from the overnight session because they got long down here, right? Wholesalers or whole buyers, large institutions, right? They were absorbing down here and they distributed up here. And then guess what? They began to take their profits. We come into the open. They began to take more of the profits and they pushed this market down. And people that were buying up here, thinking we would take out the previous day's high, got trapped and they helped liquidate the market down lower to lower prices, right? That's what occurred. All it is inventory. Inventory got long and then inventory got short to the downside. So we go out today with today's high, a triple distribution, an afternoon rally high. So let me back it up here. Let me back it up. There's a lot to explain here. A lot to explain. So in yesterday's video, I explained how if we opened up in the upper distribution above the afternoon rally high yesterday, right, that marked in J period, right here that I have marked at 43.75. If we open up above that, if we open above the single prints, those would disappear, right? So right out the gate, early on, because we opened up here at 41.65.50, those disappear. Where there were sellers yesterday, they are no longer there. So those destinations no longer matter. They essentially fill because those sellers are no longer in that location. However, I said if we opened up in the upper distribution, that would be B's high to A's low, the upper distribution, and we could not take out the day's high, then you would look to rotate down to the non-wide point of control, and that's exactly what occurred. That was game plan. I gave you the game plan yesterday, right? Gave you guys the game plan yesterday, and that is exactly what happened. We could not take out the previous day's high, and we rotated to the non-wide point of control. You could have taken a trade in B period after we taken out A's low. You could have taken a trade in C period after we took out B's low. You could have taken a trade in D period after we took out C's low to get down to that non-wide point of control, and you would have made money. Okay, so that's why having destinations like non-wide points of control and above are good destinations. It's a magnet. It's an area where a lot of business was done, and you know buyers and sellers were happy here. Why not come back to where buyers and sellers were happy again? Anyway, so we opened up, couldn't take out the day's high. B takes out A's low. We begin one time framing down, so sellers have some stuff in their pockets, right? We have one time framing down. And then C takes out B's low, so we continue to one time frame down. We take out the initial balance low. D takes out C's low. We continue to one time frame down. We create a small set of single prints in D period. E takes out D's low, continues to one time frame down. We get that non-wide point of control. Don't get much extension, right? So we come back in a little bit. And in E period, I took a few trades on the long side and on the short side because I knew there wasn't much extension. Volume had dried up a little bit. So I wanted to see how much of the single prints we'd take back. So we took back a little bit of the set of single prints here. And then in F period, filled them. So in F period, once we filled the set of single prints and seeing that we weren't pushing up much, this is the trade that I took because I was expecting an afternoon rally high. So just seeing that there was going to be some short pressure relieved gave us an opportunity to short again, to sell up here. So I was selling around 41.40 and 41.38. And this thing came in nicely for me. I got out 41.36. However, I did not hold it until the day's low. Now, it doesn't mean I didn't get involved because I got involved later in G period. Um, and then I got involved, and that was the last trade that I did on the day. Was I literally only took like 3 or 4 trades today and made over 50 points. Just well, excuse me, I only traded 3 time frames today and made over 50 points because the sell side was the way to trade, and I was the only time I ever tried buying anything was in E period, and that was after seeing we weren't getting much extension and volume was drying up. Um, so that short and F period was absolutely beautiful. Wish I would have held it to the day's low. I was actually thinking about it. I had uh, a one lot initially that I put on around 38. I added 40, and then as it came in, I took them off because I didn't know how much of the day we wanted to take back, and if it was going to look like what we did the previous day. Previous day we grinded back up, right? E, F, G, H, at afternoon rally high and H. I didn't know if that was going to be the exact same thing here. E, F, G, H, afternoon rally high, and then we sell off. So I got out of the trade in that time frame. Not a bad idea. I did want to hold it though because I had a feeling that when I was shorting up there, it was just a feeling that you would go and even Paul was saying something about how he thinks getting the previous day's low was a good odds, and then getting into the single prints down here. He even called that we would fill the single prints down here early on in the day in like D period. So uh, having that conviction and his knowledge behind me, kind of, I wanted to hold this thing basically down into the overnight low, which was right around or not the overnight low, below the overnight low at around 41.24, which was previous day's value low. That's what I was looking for. I was looking to get down in this area, 41.24, 41.25 value low, and see if we'd bounce there. So I initially had a bid down there from my sell up here to get out of the trade for a good profit, but I got out early and then reshorted in G period a few times and caught really good points on that. And then the rest of the day, it was history, right? We had uh, we one time frame down G, H was an inside bar, I was a reversal. We took out H's high, held the single prints in G period though, it reversed, came down, set a new low on the day. J period continues the one time frame down, K one time frame down. And all one time frame down means we're just setting lower lows, right? We're just taking out previous 30-minute candles low. So we took out K's 30-minute low, L pushed down, got the low day here, and then we finally filled the set of single prints back from the Fed day, trend day up, right? That massive single print there. Uh, Filled that, we pushed down, filled the set of single prints. M takes out L's low. We get a little bit of a price probe, 88.50 to 78, so 10 points. I'll mark it, but I don't know if I like it as a price probe. But we did fill the set of single prints, and we one time frame down. And even when M pushed up, you could have shorted against L's high to push down. So every push up was a short today. You shorted against D against C's high. You shorted E against the single prints in D. You shorted F at the single print fill. You shorted G on pushes up once we took out E's low. You shorted an H on pushes up against G single prints. You shorted an I against G single prints. You short in J after taking out the day's low. Actually, I didn't see that set of single prints. That's one. Oh, yeah, no, I did too. Okay. Yeah, you short in K against J single prints. You short in L to continue the one time frame down. You shorten M against L's high and continue to one time frame down. Nothing told you to buy in this market. If you bought, you lost money and you are uneducated. Simple. Used to be the same way. All right. Enough about that. Enough about the action on the day. Very exciting day. Did well. I'm happy with the way I traded it. We got a lot of destinations we took out, and a lot of destinations to mark. So let's go ahead and mark today's high. right? I always like marking these destinations on my chart. That way I know they're there whenever we start to approach it, and I can kind of anticipate what's occurring. So like having previous day's high at 41.68, I kind of anticipated that there might be sellers there. Sure enough, there was, and we never seen it. We never got above it. So today's high day is 41.66.75. After I mark these destinations, hopefully you're marking them along on your charts as well. And I'll give you some if-then statements. 209, 23, 23, 23. Okay. So we have A's high, afternoon rally high, and F. Textbook because we have single prints below. So textbook just means you either have a set of single prints above or you have a set of single prints below. Either an afternoon pullback or an afternoon rally. Either or is perfect. 42, afternoon rally high, 209, 3, boom. So there's our afternoon rally high. You can anticipate sellers there. We have a set of single prints in G period. So E marks the lower distribution or the bottom of our upper distribution or English, God bless, or our upper range. So single prints fill here. Prints fill. Why do they fill here? Because they are upside destinations now. So they would start at eyes high here at 41.25 and they would fill at 41.30. That's why they fill there. It's because it is now an upside destination. So that is our upper range from A's high to E's low, from 41.66 to 41.30, E's low. Another thing about 41.30 is right here from that massive chop day where buyers attempted to make change or attempted to have change take place above E's high was right there at 41.30. So we blasted up that day in G period above 41.30, came back, and then finally got back above it and grinded above. So 41.30 was a big level for these players that got involved in G, H, J, K, L, and M, right? Big level for those guys. Once we got below it and into this distribution range down here, things started to hit the fan, and you knew this market was going to butter to the downside. All right, anyway, 41.30 is a pretty hefty level to keep in mind. And all day yesterday, another thing, our lows down here. We're basically trying to get below E's low, but we couldn't really find acceptance down there. Today we finally did. All right, so 25.75 is where the single prints start. Single print start here. Now eyes high is the upper portion of our middle range and or our middle distribution, whichever terminology you like. So I's entire range is the middle distribution. So from 41.25.75 down to 410.75 is the distribution for the middle. You have a set of single prints that fill here. Small set, but they're there. Single prints fill 209.23. I know this is a longer video. If you made it to the end, truly appreciate your trooper. Hope you're doing well. All right, 41.09.50 is the top of our lower distribution. This is where prints will start. So that is the top of our lower distribution. And then we have our price probe at 86.25. 86.25. And then where the bottom of our hour lower distribution is at 78.25, which is also our low day here at 78.25. So tomorrow, if we open up inside of the lower distribution, then you'll be rejecting the price probe, and you have a good possibility of taking back this small set of single prints and getting into the middle distribution. Now, if we open up tomorrow below the price probe and today's low, then you'll firmly continue to one time frame down on the daily, and your next downside destination isn't until 48.50, which is also our weekly low from last week, if I'm not mistaken. I do believe so. Let me check here. I believe that's our weekly low, right? From last week. Oh, nope. Last week's low was 40.29.50. Okay. So we need to get 40.29.50. So we need to get that low there. It's a good possibility. But if we take out today's low, you have absolutely nothing until 48.50. Below there, your next destination is 40.33.25, next daily low, and then our balance low at 40.29.50. Or our weekly low, not balance low, our weekly low. If we open up above the set of single prints and in the middle distribution, then you'll look to take back the set of single prints and possibly find some sellers here at 41.42. 41.30 is going to be a big level, so if we fill that set of single prints, watch out, because it's a good possibility you'll get above the afternoon rally high. I'm not expecting that, but we'll see how tomorrow goes. Thanks for stopping by, guys. I hope you've learned something. I hope you enjoyed the video. If you do, please leave a like. If you're new, please subscribe. And once again, go check out Paul's channel. I'll have a link in the description below. Thanks for stopping by, guys. We'll catch you in the next one.